With austerity measures in Europe leading to a global restructuring of the banking sector, how do Asian banks stand to gain? Prize-winning economist Dr. Ha-Joon Chang. Now, in your book, you talk about how the US as well as the UK have suffered deeply from the increasing interdependence of the banking system. You've got derivatives trading, for instance, relying on other aspects of the bank, and as a result, it creates sort of this disease effect in hard economic times. Would you say that Asia is also characterized by this malaise?
Yes, I think Asian banks have a few things going for them. I mean, first of all, given the stage of development they're at, except for Japan, their banks still have heavy involvement in the corporate lending, which has limited their exposure to this derivative trading and other complex financial products like CDOs and CDSs. So that was one thing that protected them a bit more from this global trend throughout the last several years. Another thing that is to their advantage is that they are mostly based on very rapidly growing economy, where they can actually iron out a lot of non-performing loans simply on the back of rapid growth.
Right. So talk to me about some of the buffers that have been put in place that perhaps emerging markets in general, but Asian banks in particular, so they are not impacted by a fluctuating US currency as we saw in the last crisis.
That's another thing that I was going to mention. You know, exactly because they were burned by the Asian financial crisis back in the late 1990s, Asian governments have been a lot more cautious in letting the banks rip, and they've been careful with foreign reserves and so on. So yes, I mean, these banks have exactly learning from that bitter experience. They have built a lot more reserves.
Let's talk about financing tools, okay? What would you recommend these banks to focus on then as they're capitalizing on the fact that there is stronger growth in Asia right now? And look at HSBC looking to move its operations or focus its operations back on the Asian market.
That's right,
so
yeah.
with everyone focusing on Asia right now, what are the tools that they should seek to continue to expand and mature in the banking sector?
Yeah. They need to focus on the corporate lending. And this has been the strength of, for example, the German economy. You know, their banks that work very closely with companies to bring finance and discipline to what these companies are doing, and that has been at the heart of German economic strength. So I'm not saying that you can just copy the German model in Asia, but these countries need to strengthen the corporate business before moving into these riskier areas like derivatives and so on. And of course, the government needs to restrict these financial products, because when you pick a particular product and try to see whether it serves some useful purpose, they usually do. But you need to think about the systemic risk, because that was what was missing in the making of the 2008 financial crisis. I mean, each product on its own looked okay.
Right, but the compounded effect, right.
Yeah,
okay.
And now you have created this system that is so complex but so interconnected, you don't know where the troubles are going to begin and how it's going to spread. When you're managing other complex systems, you don't approach it that way. For example, the aircraft is a very complex system, but each system can be isolated so that it doesn't affect the whole the operation. But somehow in the management of the financial system, especially the banking system, we have created this system which is not only complex but so interconnected, and there's no obvious way to isolate problem parts. Once a problem begins somewhere in, I don't know, mortgage market in Florida or the Japanese real estate market, I mean, it spreads to the whole thing. Yeah.
But that's essentially the inertia behind the too big to fail argument,
Absolutely,
isn't it?
Yeah. A lot of Asian banks are still kind of novices when it comes to dealing with these complex financial products that have been driving the growth of the financial industry worldwide in the last couple of decades. And my worry is that they might become cocky because they are growing fast and they think they can handle anything, and then get into those sectors and burn themselves.
Is the fear also that they'll grow in isolation, that Singapore and Hong Kong will definitely be the giants to watch for in the next 5 5 years, but their neighbors around them perhaps may not grow at rapid of a pace because their economies are not as strong either.
Of course, yeah. And even for China, I'm not entirely optimistic because, it has a lot of problems in the financial sector, a huge amount of non-performing loans. Of course, a lot of it is ironed out by simple fact that the economy is growing at 7, 8, 9%. But what is it going to do when the economy slows down as it is doing? Yeah?